Let's try and decode the earnings with Mr. Kishor Patil. He's the co-founder, CEO and MD at KPIT Technologies. Mr. Patil, hi, good morning. Thank you so much for making time and speaking with us. I wanted to begin by asking you about the outlook going forward, because at a time when rest of the peers and rest of the IT companies are talking about uncertainty, headwinds, ramp downs, you are talking about a 27 to 30% growth. Is it the fact that the transportation ER&D segment is completely unscathed with what is happening across the globe, or there is going to be a time lag impact and there could be a slowdown as we move further into FY24?
Good morning to you. I think let me take a little bit step back and then maybe explain to you what I mean by this. See, as you know that basically what you have to understand is what is the business model of every individual company instead of making it generic. And in our case, as we have been saying, and more we have been focused on basically automotive mobility and only on future technologies, and that too on specifically SDV programs. Now, these are the new architecture programs which they have to introduce the cars in next 3 to 4 years. And once typically the OEMs commit to these kind of programs, there is not much, flexibility for multiple reasons. If they compromise on that, then their future launches of the products will get compromised. So that is the reason there is a bit of a stickiness and there is a better clarity over the programs. And as a company, as we have done that, as we have been saying that about 70% of the programs we work globally, I think that gives us that visibility. And that has also, if you remember last 2 to 3 weeks, 3 to 4 months, we have announced 2 significant engagements with both Renault and Honda. And that is basically allowing us to give this confidence. I'm not trying to generalize this. It is a very specific situation relating to the company, the focus, and more importantly, the leadership position we have in the sector in which we are operating.
Sure, no, Mr. Patil, that point is taken. Given that you're in a niche area, the sector thematics are a tad bit different. But since you talked about the 2 deals, in the quarter gone by, the deal wins came in at the record high level, led by the Honda order itself. Is this kind of deal momentum likely to continue? And secondly, are there any other such large deals in the pipeline which is likely to materialize in the next 3 to 6 months?
Yeah, I think, again, just going back, we are a very, very focused company. So we have about 25 clients we work with. And the way we have identified those clients where we will strategically engage. Now, for example, you all know that we work with Cummins for a long time. There is a historical reason. There are BMW we work with in the long term. So all these clients are very, very strategic. And there are, of course, other clients beyond this. So that's something which is there. And we have been working, and it is scaling, and it is scaling to a significant level, and the same level, if not more, some cases than what you see in the large deals. But I think these are the larger engagements which we have specifically come out and say, where the clients have taken a different view and they have taken it in a holistic, long-range, full program view now. And that's where we were getting engaged in that way. That's when we have made the announcement. So to tell you, our basic business is the same. Our business model is the same. We may or may not announce the engagements, and it really depends upon the client and the stage at which we are there.
Telling us,
but
and I
your answer, but to your answer, the growth continues across the client.
When you're saying you're confident of a 3 to 5%, 3 to 5 year growth, would you be able to maintain this run rate of 20% plus even on a higher base for next 3 to 5 years? But that means technically, if you're growing at 20% plus, 3 years, your business is doubling.
We have more or less done it over the last 5 years, apart from one year. And as I mentioned, currently, that's how we see the external environment. That's what we see. We, of course, we give at this level how is the external environment and how we are, and specifically looking at where our spend of our clients is and how we are positioned there. That gives us confidence to make a broad statement, and I think that's what people wanted to know. But of course, we will always give a very specific outlook for a year.
So net, what I infer from what you're saying is that 20% growth rate is going to be maintainable at least for the next 3 to 5 years. That's the kind of visibility you have due to the stickiness of the client spends. I also wanted to talk about the JP Morgan report that came just a few days ago, and we had seen a big reaction in the stock. And there, one of the concerns was that the company has not diversified much, high exposure to a particular vertical, and the client concentration is also quite heavy. Your reply to that?
No, I think I would like to stick to what is the strategy of our company, and different companies take different view. I mean, they are entitled to take their view. There are other companies as reputed and multiple companies who have taken a different view. We actually believe the focus is very important. I think what is highly important is the leadership, global leadership, the way KPIT is engaged. It is a very significant part because then you are in a position to maximize the growth opportunities, as well as in case where the market gets, if I had to say, a little soft, you are in a position to eat into the market share. So, and we believe that that's the only way to create a true global leader. And the opportunity, in our view, is 5 to 10 years consistent increase in the spend, which has been which has come out of multiple reports. So that's our view. I do not want to react to what other people say. We have
Patil, your margins have also been fairly sticky within that 18 to 19% range of late. You have talked about bringing it up to 19 to 20% in the coming year, but give us a bit of medium-term outlook there as well, because you were in a bit of investment phase earlier. Are you likely to head maybe towards that 20 to 23% mark?
We have always said that in next few years we will cross 20, and if you see every year we have increased our EBITDA by a certain percentage, in some cases 0.5%, 1%, or whatever. And what we have been saying is we are reinvesting anything beyond that into our growth, and that is what is paying dividend, because first, this is a very transformational phase of automotive industry. Technology changes very quickly. We have to keep on investing into technology. We have to keep on investing into building talent. The higher growth also brings that, and specifically the specialized client. So that is what it is. So to answer your question, specifically in next few years, of course, we'll go beyond 20% EBITDA. What we do, and we have been saying that even today, and if we have to just, we continue to make one of the highest number of investment in terms of R&D, so in research and development, and that is our strategy, that we just focus on a certain kind of EBITDA margin, and beyond that we'll reinvest into the business, whether it is growth, it is infrastructure, it is people. We will make the investment as it is.
Patil, on that note, we'll let you go. Thank you so much for joining us today. So talking about how the opportunity is quite strong in the vertical for the next 5 to 10 years, expecting to stay above the 20% growth rate for at least next 3 to 5 years. And the margin is something also which is expected to head above the 20% mark for the next few years. The stock sitting with a gain of around 3.25%.